Commodity trader Glencore is methodically taking over the base metals market. I'm here with Dan Dicker. He's one of our senior contributors and has done a lot of time in the commodities market. So it seems like this is a huge story that's not getting a lot of attention, that Glencore is slowly taking over deals, and now they want to buy Xstrata, this mining company, and it seems like everybody's kind of rolling over and going, yeah, sure, take them. Well,
you set it up really well by calling them at the top of the segment a trader. This is what makes them different from everybody else in the space. They trade on the marketplace as if they were a miner, and they're really not. They go back, their roots are with the Mark Rich Group, the one who was famously pardoned by Clinton. This is a trading company that has become a mining company, and the reason that they do that is they buy physical assets, which in the end helps their marketing arm. Now they also obviously trade and play like a miner themselves. They do pull stuff out of the ground and sell it, but to a large degree, their money is really made on the marketing, on the trading side, and that's where you got to understand how different this company is from everybody else. So slowly what they do is they continue to buy more and more physical assets, and it's from owning those physical assets that they gain an advantage into the financial side, into the marketing and trading side. Now, I understand that this is a complicated thing, which is why in many ways it's kind of slipping under the radar, but what they are doing, in fact, very slowly is creating that kind of OPEC-like cartel type of environment for base metals, particularly for zinc, which they already have 70% of the financial trade coming across their desks, and copper, where they're already at 50% of the financial trade going across their desks. Obviously, with the addition of Xstrata, that number increases, and with it, more influence in all of these base metal markets.
Which means by having that kind of control, they can really ultimately start to control those prices. And those products affect a lot of our products.
I want to be careful about saying control prices, because that is true. There is a certain amount of monopoly theory that can go with this, but it's not really what Glencore does. They really don't care that much about price.
Well, they want the prices to go up.
Absolutely. They want the prices to go up, as every commodity company does, as every oil company does, as every natural gas company will. Of course they do, but their money is really made by seeing that flow of physical trade go across their desk on the financial side. Of course they do a heck of a lot better if the price is going up, so there is some monopoly interest here, but what's made them impossible to block, or at least this merger to be blocked, from the European side and clearly from the Chinese, who are looking at it right now, but look like they're going to approve it as well, is that idea that they're really not trying to monopolize the market in order to drive prices up necessarily. Their game is really to control the physical market so that their marketing arm continues to make better profits. That's a difficult distinction, but an important one here.
All right, but how is that fitting in with the CME? I mean, how is that fitting in with the trading going on over here in those metals?
The CME is really only futures, okay? So futures is a very small part of what is the financial piece of the puzzle. For example, there is no zinc market in futures, but there's a huge forwards market, over-the-counter market, swaps market in zinc that, in fact, Glencore and a few other private traders control. This is a secondary. It's also a financial market, but it's not as well regulated or as well known as, for example, where I came from in the futures market. So this is the difference here.
They affect it, but they don't necessarily control it.
That's correct. And control is always, again, you got to be real careful with your terms here. It's about influence more than control. Because if it was truly control, you'd have a big step up of regulators who would be coming in trying to break up the merger.
All right, so you're saying, you know what, the regular investor, the regular Joe's going, I'm not so interested.
Yeah, but here's the point.
Why should they be?
Well, because Glencore is the only publicly traded one of these private companies that are out there. So, in fact, you can gain a stake in somebody who's actually trying to build a cartel. Think if you were somebody who could invest in OPEC circa 1979. You know what I mean? I mean, that would be a great investment, right? So, in my view, this is that kind of investment where you're trying to get in and be part of this company that's trying to take at least financial control over a lot of these base metals, which as the economic conditions get better across time, is going to be more and more important.
All right, well, that is Glencore. It's traded on the London Exchange, GLEN.L on the London Exchange. That's Dan Dicker. He knows his stuff. And I'm Debra Borchardt with The Street.